Did you know that you can significantly boost your profits using just one LuxAlgo indicator? In this video, I'm revealing the top 3-day trading strategies that can help you maximize gains and take control of your trades with ease. So let's dive straight into it with our first strategy for today. First, I want to introduce you to a strategy that is all about trend trading. If you're not familiar with this, it's pretty straightforward. You follow the market's overall mood. This means you buy when most people are buying, and you sell when they're selling. This style of trading is quite risky on a lower time frame, such as the 5 minutes, especially if you don't know what you're doing. But don't worry, the strategy I'm about to show you in this video has minimal risk, and it's almost never wrong when it comes to trade entries. To learn all about this strategy, let's start with a clean chart. This strategy works on several markets and time frames. It can be used from 15 minutes to 4 hours and more, but as an example for this video, we will use the Ethereum chart on the 5 minutes time frame. The strategy includes one indicator only. In order to add it, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium. It is the most popular premium tool created by LuxAlgo, so click that to your chart. Now let's open the settings of the LuxAlgo Signals and Overlays indicator and adjust its settings. First, let's take a look at the basic settings. For the presets and filters, we want to use none. For the signal mode, we also want to use confirmation and exits, and we do not want to use the AI signal classifier, so make sure this option is disabled. We can leave the signal sensitivity by default as we are going to use the autopilot sensitivity. Next, for the candle coloring, we are going to use confirmation simple. For this strategy, we want to use the Neo Cloud indicator overlay, so make sure to enable the Neo Cloud by clicking this checkbox. Within the advanced settings, we want to set the autopilot sensitivity to midterm. Now, before we get into the trading rules, let's understand how this indicator and signals work, and let's start with this buy and sell signals. The confirmation signals help us decide when to buy or sell. They change based on recent market trends. These signals work best when we use them together with other trading tools. There are two kinds of confirmation signals: normal signals and strong signals. The normal buy and sell signals are these up and down triangles without a plus sign, and the strong signals are these up and down signals with a plus sign. The strong signals are matching the current market trend, showing it's a good time to follow the trend. The normal signals might show up during short-term market changes. As we want to be on the safe side, we are going to use only the strong buy and sell signals, which include the plus sign in it. For our strategy, we are going to use the candle coloring as well. The green candles represent strong bullish activity, and the red candles represent strong bearish activity. The purple-colored candles show us a normal activity, so for our strategy, we are going to use only the green and red candles to enter the trades. Finally, let's understand the logic behind the Neo Cloud. The Neo Cloud is like the Ichimoku cloud and helps us see the direction of the market trend. When the market is going up, the Neo Cloud acts like a support. When it's going down, it acts like a resistance. This helps you make better decisions on when to enter a trade. The clouds are changing their color to show how new or old the trend is. Brighter colors mean the trend has been going on for a longer time. We will use the brightness of the Neo Cloud to know when to avoid entering a trade. As we can see here, the blue cloud is colored in its brightest blue, so we are not going to enter a long trade at this point. The exact opposite is true for the red-colored clouds. The cloud is colored in its brightest red, so we will avoid entering short trades when it's colored like this. Now on to the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably. And let's first start with the rules to enter a long trade. For a long entry signal to be valid, there must be 3 conditions met. First, we need to see the Neo Cloud being colored in blue. Second, the indicator needs to print a strong buy signal, which is this green triangle up with a plus sign. Third, the candle must be colored in green. If all conditions are met, we can enter a long trade. We set the stop loss at the recent low, and for our take profit, we are going to target a 1 to 1.5 risk to reward ratio. Let me show you another example for a valid long entry signal. So let's check 3 easy steps: blue-colored Neo Cloud, strong buy signal, green-colored candle, stop loss at the recent low. And we are targeting a 1 to 1.5 risk-reward ratio. Let me show you an example for an invalid long entry signal. As we can see here, obviously all conditions are met. We can see the blue Neo Cloud. The indicator printed a strong buy signal and the candle is colored in green. But as I explained earlier, we can see the Neo Cloud is colored in its brightest blue, which means we want to avoid entering a trade. Now let's talk about the rules for entering a short trade. For a short entry signal to be valid, there must be 3 conditions met. First, we need to see the Neo cloud being colored in red. Second, the indicator needs to print a strong sell signal, which is this red triangle down with a plus sign. Third, the candle must be colored in red. If all conditions are met, we can enter a short trade. We set the stop loss at the recent high, and for our take profit, we are going to target a 1 to 1.5 risk to reward ratio. Let me show you another example for a valid short entry signal. So let's check 3 easy steps. Red-colored Neo cloud, strong sell signal, red-colored candle. Stop loss at the recent high, and we are targeting a 1 to 1.5 risk-reward ratio. Let me show you an example for an invalid short entry signal. As we can see here, obviously all conditions are met. We can see the red Neo cloud, the indicator printed a strong sell signal, and the candle is colored in red. But we can see the Neo cloud is colored in its brightest red, which means we want to avoid entering a trade. Here's a pro tip for those just starting in trading. If you're unsure about which trades to make, try adding an exponential moving average to your chart. Set its length to 200. This EMA line helps you see the trend direction. Use it to guide your trades. Go for long trades when the buy signals are above the EMA line, and go for short trades when the sell signals are below the EMA line. Now that you've seen the first strategy in action, let's keep the momentum going with our second strategy. I'm revealing a game-changing trading strategy that leverages one of TradingView's most precise indicators. This strategy shines on lower time frames like the 1-minute and 5-minute charts, making it ideal for day traders aiming for quick, consistent profits. It also performs impressively on higher time frames like the 4-hour and daily charts. Whether you trade cryptocurrencies like Bitcoin and altcoins, major forex pairs, or stocks, this strategy delivers exceptional results. I tested this strategy manually 100 times on the Apple 5 minutes chart, and here are the results. I started trading with a $5,000 account balance. Depending on volatility in the session, I use 5 to 10% of my account per trade. For example, if I profit $100 on a trade, my new balance is $5,100, and I use 5 to 10% of this updated balance for the next trade. Conversely, if I lose $100, my balance drops to $4,900, and I use 5 to 10% of this new balance for the following trade. Traders, before we start, make sure to like this video and subscribe to my channel. This way you won't miss out on any of the powerful trading strategies I share, which can significantly boost your trading success. Okay, without wasting any time, let's get straight into it. Today, I'm excited to share a powerful strategy based on reversal trading. If you're not familiar with reversals, it's a technique where you enter the market when you anticipate a complete change in the prevailing trend. In simpler terms, you buy when a downtrend is about to reverse into an uptrend, and you sell when an uptrend is about to reverse into a downtrend. This approach allows you to capitalize on major market turning points and can significantly boost your potential profits. However, it requires careful analysis and timing to ensure that the reversal is genuine and not a temporary correction. This style of trading can be quite risky on lower time frames, especially if you're not experienced. But don't worry, the strategy I'm about to show you in this video is a very safe version of reversal trading. It follows 4 strict rules, each of which is absolutely crucial to follow. By adhering to these rules, you can minimize risk and achieve highly accurate trade entries. Imagine making nearly foolproof trades and watching your profits soar. As an example, we will use the Apple price chart on a 5-minute time frame. The strategy includes one indicator only. In order to add the indicator, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium. So click that to add it to your chart. Haven't heard of LuxAlgo yet? It's an all-in-one indicator with over 20 features designed to give traders useful signals and overlays. It's fully packed with tools for technical analysis. LuxAlgo is the top provider of technical indicators globally, trusted by over 50,000 traders. With the Ultimate membership, you get advanced signals and overlays, estimates of institutional volume, and over 20 other premium features. These include highly rated indicators developed from community feedback, access to a Discord community with scanners and bots, real-time alerts, non-repainting signals, and much more. These indicators work on any market on TradingView, such as stocks, crypto, forex, futures, and commodities, and on all time frames. They're versatile, fitting any trading style like scalping, swing trading, or investing, and are great for uncovering technical insights. If you're serious about elevating your trading skills and building a career in this field, LuxAlgo offers 3 plans. The Essential plan includes the Price Action Concepts Toolkit. The Premium plan adds the Signals and Overlays Toolkit with built-in AI, plus the Oscillator Matrix Indicator and the Price Action Concepts Toolkit. I personally chose the ultimate plan, which combines all 3 toolkits and 3 backtesting system strategy scripts. Alright, now let's click the settings of the signals and overlays indicator. For the signal mode, we want to use confirmation and exits. Set the candle coloring to confirmation simple, disable the smart trail, enable the reversal zone set to 3, as well as the trend catcher set to 3, and make sure to enable the Neo Cloud set to 2. For the signal sensitivity, depending on the asset and time frame you're trading, I'll recommend using the autopilot sensitivity set to midterm, or use the manual sensitivity recommended by the dashboard. Our setup is ready. For today's strategy, our main focus lies on the reversal zones. You'll notice these green and red cloudy zones on your chart, positioned above and below the price action. At first glance, you might think, just buy when the price enters the green zone and sell when it enters the red zone. However, while these zones are excellent for identifying potential tops and bottoms, we need more confirmation to make profitable trades. The reversal zones display one upper and one lower zone, helping us find market tops and bottoms, whether the market is ranging or trending. Although this indicator is more effective during ranging markets, it's crucial to use these zones as part of a broader strategy. We will indeed use the reversal zones to find entry points, but this is only our first confirmation rule. Trading based solely on these zones would not be profitable on such a low time frame like the 5 minutes. The primary function of the reversal zones is to act as initial signals. When the price enters the green zone, it suggests a potential buying opportunity, and when it enters the red zone, it indicates a possible selling opportunity. However, we need additional confirmations before entering a trade. So, watch for the price to test these zones. Use the reversal zones as your first confirmation method to identify potential entry points. When the price tests the green zone, consider it as a potential area to enter long trades. Conversely, when it tests the red zone, consider it as a potential area for short trades. But remember, you always want to look for further confirmations before making your move. So, when exactly should we enter long or short trades? Here are the exact rules for a buy position. Make sure to pay close attention to every single one of them. First, ensure the price action enters and completely exits the green reversal zone. This step shows the market is preparing for a bullish reversal. Second, wait for a green buy or strong buy signal. This confirms the upward momentum. Third, check that the trend catcher line is green. This indicates the trend is in your favor. Fourth, verify that the Neo Cloud is blue. A blue Neo Cloud suggests a supportive bullish environment. Fifth, most crucially, look for 2 uninterrupted green candlesticks. This confirms a steady upward movement. If all these conditions are met, enter a buy trade. For the stop loss, use the trend catcher, the Neo Cloud, or the most recent swing low. For taking profit, wait for the price to reach the middle of the red reversal zone. Just think of the potential profits with such precise entries. Now let me show you another buy trade example. First, watch for the price action to move into and completely exit the green reversal zone. This signals a potential market bottom and reversal point. Second, you need to see a buy or strong buy signal appear. This validates the bullish sentiment. Third, make sure the trend catcher line is green. This shows that the overall trend is aligned with your trade. Fourth, ensure the Neo Cloud is colored blue. A blue Neo Cloud confirms the bullish setup. Finally, observe 2 consecutive green candlesticks. This indicates strong and consistent buying pressure. Once all these criteria are met, place a buy trade. Set your stop loss at the trend catcher, Neo Cloud, or most recent swing low. For profit taking, aim for the price to hit the middle of the red reversal zone. Now as we move forward on the chart, you'll notice this was a significant move to the upside. While my trade, following the rules strictly, was already an excellent winning trade with a 1 to 3.1 risk to reward ratio, I could have made even more profit. Let me show you an alternative profit-taking strategy that I recommend for more advanced traders. Instead of closing your trade when the candlestick hits the middle of the upper reversal zone, close half of your position and move your stop loss to break even so you can't lose money anymore. Then, use the Neo Cloud for your trailing stop loss. This way, you incrementally move your stop loss higher. Using this strategy, we would have been stopped out at this purple candlestick with a risk-to-reward ratio of almost 1 to 9. Imagine the potential profits with this advanced exit strategy. Traders, if you like this video and strategy, don't forget to hit the like button and subscribe to my channel. And now before we take a look at how to enter a sell trade, let me show you one more buy trade example. First, look for the price action to enter and then fully exit the green reversal zone. Second, wait for a green buy or strong buy signal. Third, confirm that the trend catcher line is green. Fourth, check that the Neo Cloud is blue. Fifth, and critically, ensure there are 2 uninterrupted green candlesticks. When all these conditions are satisfied, initiate a buy trade. Set your stop loss based on the trend catcher, the Neo Cloud, or the most recent swing low, depending on your asset and risk management strategy. For taking profit, wait for the price to reach the midpoint of the red reversal zone. Moving on, let me show you how you want to enter a sell trade. First, ensure the price action enters and completely exits the red reversal zone. This step shows the market is preparing for a potential bearish reversal. Second, wait for a sell or strong sell signal. This confirms the downward momentum. Third, check that the trend catcher line is red. This indicates the trend is in your favor. Fourth, verify that the Neo Cloud is red. A red Neo Cloud suggests a supportive bearish environment. Fifth, look for 2 uninterrupted red candlesticks. This confirms a steady downward movement. If all these conditions are met, enter a sell trade. For the stop loss, use the trend catcher, Neo Cloud, or the most recent swing high. For taking profit, wait for the price to reach the middle of the green reversal zone. Just imagine the potential profit when the market moves in your favor. Alright, now I am going to show you another very interesting sell trade example. First, watch for the price action to enter and then completely exit the red reversal zone. Second, you want to wait for a sell signal. Third, ensure the trend catcher line is red. Next, confirm that the Neo Cloud is red. And finally, you want to observe 2 consecutive red candlesticks. Now, as all conditions are met, initiate a sell trade. For the stop loss, use the trend catcher, Neo Cloud, or the most recent swing high. For taking profit, aim for the price to hit the middle of the green reversal zone. For this trading example, there's 2 things I want to mention. First, you might wonder if this entry was still valid given the multiple trend catcher color changes and buy and sell signals. Let me explain why I would still consider it valid. If we draw a rectangle above the price action, you'll see this was just a sideways move where the market was taking a breath before deciding its next direction. Importantly, the price did not enter the lower reversal zone while moving sideways. Instead, it started touching the reversal zone after a strong sell signal and once the trend catcher line was solid red, indicating bearish movement for multiple candles. The second thing I want to mention is the exit strategy, which is the same as in our second buy trade example. We could have closed half of our position right here where the price action hit the green reversal band, and then used the red Neo Cloud as our trailing stop loss. This way, we would have achieved a profit trade with a 1 to almost 6 risk-to-reward ratio instead of a 1 to 1.6 risk-to-reward trade. Imagine how much profit you could potentially make trading the strategy in this way. Ready for the final strategy? Let's jump right in. I tested this strategy manually 100 times on the 1-hour chart, and here are the results. I started trading with a $5,000 account balance, using 5 to 10% of my account per trade. For instance, if I profit $100 on a trade, my new balance is $5,100. And I use 5 to 10% of this updated balance for the next trade. Okay, without wasting any time, let's get straight into it. The strategy I'm sharing today is based on trend trading. If you're not familiar with it, it's when you follow the prevailing market sentiment, buying when everyone else is buying and selling when everyone else is selling. Trading with the trend can be very profitable, but it requires discipline and patience, especially if you're inexperienced. But don't worry, the strategy I'll show you in this video has minimal risk and is highly accurate for trade entries when it's used for less volatile markets like Solana, Bitcoin, or Ethereum. To learn all about this strategy, let's start with a clean chart. This strategy works on several markets and time frames. It can be used from 1 minute to 4 hours and more. But as an example for this video, we will use the Solana chart on a 15 minutes time frame. The strategy includes one indicator, and in order to add it, click on the Indicators tab and search for LuxAlgo Signals and Overlays Premium and click that to your chart. The Signals and Overlays toolkit has over 20 features, including built-in buy and sell signals, AI signals, and reversal bands to detect potential trend reversals. This all-in-one toolkit is designed to meet any trader's technical analysis needs and can be used alone or with other analysis methods. However, it's recommended to combine only a few features at a time. In this video, we will focus on using just 2 of them to create our powerful trading strategy. So let's open the settings and adjust our indicator, starting with the basic settings. First, for the presets and filters, we want to use None. Next, for the signal mode, also select None and make sure the AI signal classifier is disabled. We can leave the signal sensitivity at its default setting. Then, for the candle coloring, we are going to use Confirmation Simple. Note that we don't need candle coloring for this strategy, so it's just a preference if you want to enable this option. Moving on, we don't need the Smart Trail, so make sure to uncheck this box. We are going to use the Trend Catcher and the Trend Tracer, so enable both options. For this strategy, we are not using candle coloring as an entry condition. However, within the advanced settings, you can set the autopilot sensitivity to midterm if you prefer. Alright, now let's head over to the Style tab and change the colors for the trend tracer to yellow and orange. For the line type, choose the option with crosses right here. Next, change the colors of the trend catcher to blue and purple, and make the lines thicker to increase their visibility, just like this. Okay, now before we get into how to enter a buy or a sell trade, let's first understand how these indicator overlays work and how we will use them to find our entries. The trend tracer is a trend-following tool that helps estimate the overall trend of the price. When it shows an uptrend, it will be yellow, and when it shows a downtrend, it will be orange. We will use the trend tracer as a guide to know if the overall trend is bullish or bearish. It acts as a trailing support or resistance line, helping us decide when to enter trades in line with the current trend. The trend catcher, however, is similar to the trend tracer but is designed to detect early trends and is more reactive. It also uses colors to show trends, blue for uptrend and purple for downtrend. We will use the trend catcher to spot pullbacks in price, helping us find the best possible entries while the trend tracer shows the overall trend direction. This way, we make sure to enter into a trend continuation and avoid entering when the market is about to reverse its overall trend direction, maximizing profits and minimizing losing trades. Now on to the fun stuff. Let's delve into the trading rules to understand how we can use this strategy profitably, and let's first start with the rules to enter a buy trade. For a buy signal to be valid, there must be only two conditions met. First, we need to identify an uptrend. We can identify the uptrend simply by using the trend tracer. As we can see here, the trend tracer is colored in yellow, which indicates that we are in an uptrend, so the first entry condition is met. Second, the trend catcher line must be blue and located above the yellow crosses. Next, it must cross below the trend tracer and switch its color from blue to purple. Finally, the trend tracer must change back to blue and its line needs to cross above the yellow crosses again. This might sound a bit confusing at first, but it's really simple. Blue line above, switch to purple and cross below, switch back to blue, and cross above the yellow trend tracer. As both conditions are met at this candlestick, you want to open a buy trade and set your stop loss below the last swing low. For profit taking, target either a 1 to 1.5 or a 1 to 2 risk to reward ratio, depending on your risk management preference, asset, and time frame. For Solana, I'm going with a 1 to 2 risk reward. Alright, now I'm going to show you another example for a valid buy entry, so let's go through the two simple steps again. For a buy signal to be valid, there are just two conditions to meet. First, identify an uptrend using the trend tracer. Here, the trend tracer is yellow, indicating an uptrend, so the first condition is fulfilled. Next, the trend catcher line should be blue and above the yellow crosses. It must then cross below the trend tracer and switch from blue to purple. Finally, the trend tracer should turn back to blue and cross above the yellow crosses. Simply put, the blue line should be above, switch to purple and cross below, then switch back to blue and cross above the yellow crosses. When these conditions are met, open a buy trade and place your stop loss below the last swing low. For profit taking, use a 1 to 1.5 or 1 to 2 risk to reward ratio, just like in the previous example. Okay, now we want to take a look at how to enter a sell trade. For a sell signal to be valid, there are two conditions to meet. First, you need to identify a downtrend using the trend tracer. Here, the trend tracer is orange, indicating a downtrend, so the first condition is met. Next, the trend catcher line should start off purple and below the trend tracer. It must then cross above the trend tracer and change its color from purple to blue. Finally, the trend catcher should turn back to purple and cross below the trend tracer again. To summarize, the purple line should be below, switch to blue and cross above, then switch back to purple and cross below the orange trend tracer. As the conditions are met at this candlestick, we're going to open a sell trade and set our stop loss above the most recent swing high. For profit taking, use either a 1 to 1.5 or a 1 to 2 risk to reward ratio, depending on your risk management strategy, the asset, and the time frame. For Solana, I'm opting for a 1 to 2 risk to reward ratio. Now let me demonstrate another example of a valid short entry signal. Let's go through the two easy steps once again. For a sell signal to be valid, we need to meet two conditions. First, identify a downtrend with the help of the trend tracer. As we can see here, the trend tracer is colored orange, signaling a downtrend, so the first condition is fulfilled. Next, the trend catcher line must be purple and positioned below the orange crosses. It then needs to cross above the trend tracer and switch from purple to blue. Finally, the trend catcher must revert back to purple and cross below the orange crosses once more. Once both conditions are satisfied, initiate a sell trade and place your stop loss above the last swing high. For profit taking, target a 1 to 1.5 or 1 to 2 risk-to-reward ratio, just as in the previous example. Remember, a great strategy is complemented by great tools. LuxAlgo premium indicators are a game changer. Using my link in the description not only supports my channel, but also gets you up to a 50% discount with annual payment. It's an opportunity to elevate your trading game affordably. If you want to learn my best strategies for trading crypto, forex, and stocks, check out this video right here.